Hello, good afternoon, everyone. So thank you for staying until right now. I know that everyone is ready, flooded with all the infos today. So today I'm Alicia, the product manager of FSMOne, and also have us here by my side, Kinon, the bond, equity, and also stocks manager here. So today we will be diving down into the untapped opportunities on how investors and our users can use FSMOnes to invest globally and profitably. So our session today is going to be very fun. It's not going to be stiff, yeah. So it's going to be a dialogue session, so I hope everyone enjoys our session. All right, so the very first question standing from all of the investors. So just now we had a poll, right? Everyone's prefer equities over other products. So then I have a very first question to ask Kinon. So why should I include bond in my portfolio?
Okay, before I answer that question, I just want to wish everyone a Happy New Year. The poll really break my heart, because only 4% voted fixed income, right? And obviously, being obviously oversee the fixed income, my obvious answer is going to be yes. But why? I think I will start off, just a quick disclaimer. I will start off with this quote, I would perceive bonds in an insurance policy that pays you, right? But what do I mean by that? I think, first of all, bond, because nature of the bond, pay steady cash flow, regardless of the economic condition, whether up and down, bonds is stable, right? They give you steady cash flow. That, having said that, bond add resiliency into your portfolio, right? And also diversification into different asset classes. But before I go explain the next one, why insurance, bond is an insurance policy that pays you, right? I think I just want to give everyone, just understanding towards bond. I think a lot of, in theory, we always think that, bonds and equity always move in the opposite direction, right? The equity goes down, the bond should goes up. So I think naturally, everyone would think that, bond is a good hedge against equity, right? But that's not really the case. In fact, bond hedge against economy, not equity, right? If you look past, I think 2 or 3 years, bonds and equity move in the same direction. When the Fed cuts rate, equity is all-time high. The bond prices also been going up, right? Because of a high inflation and the economy is still intact, right? So this insurance policy that when you buy into a bond, it's an insurance policy that pays you. What I mean by that is that it protects you against uncertainty, right? I think the previous session, I think we heard a lot of speaker and some fund managers, already give out outlook, global market outlook, as well as some local one, right? But as a clever investor, I just want you guys to think, what might go wrong, what if things doesn't go as planned, right? That means that, having said that, the economy deteriorate way faster than expected, right? Give you an example. I think back in 1 or 2 years back, when Fed's deciding whether they're going to start their interest rate cut, cycle, normalizing the interest rate trend, I think they also didn't know when is the right time. And I think even the FOMC and also the non-farm payroll job numbers also been giving the Fed a very challenging job, right? So I'm just trying to highlight, bonds basically protect you against uncertainty, right? What if the economy deteriorates way faster? Having said that, the Feds will have to cut rate, faster than expected, right? Having said that, then bonds will, generally increase in value and give you, and cushion that loss in the portfolio, yeah. So I think with that, if let's say things goes as planned, right? And current interest rate environment, ringgit as well as the foreign currency one are giving you very decent, ranging from 5% all the way to 8% of return every year. So if things goes as planned, the bonds still pay you coupon, right? So this is what I mean by it's an insurance that protect uncertainty and at the same time paying you. Yep.
Yeah, and also bonds actually do consistent cash flow, like be it on the semi-annually basis or on the annually basis, whereby you will see your cash flowing in. So this is the concept of a bond. Yeah. So then, move on to the next slide. Yep. So, Kinon. The bond actually do has the risk, right? Starting from AAA with the first investment grade bonds down to the junk bond, like the D bond. Yeah. So then how do investors know which range of the bonds, to select, and also, yeah, which one come with the risk and return thing?
Basically, a tips lah. Yeah. So I think from the dealing team perspective, I think how we position this year is look for high quality bond, anything above BBB, and then go anything somewhere below 7 years. I'm talking about tenor of the bond, right? Because the reason why we go for higher tenor, because it adds durations to your portfolio. Then what happens is that when the rate start cutting rate, then you will have duration means like when the interest rate goes down, the bond value will go up in certain percentage. That measure the sensitivity. So adding duration, that means the bond is more sensitive to interest rate movement. So the interest rate goes down, the bond value increase in value. Yeah. So I think the next question, I think also the next thing that we want to address is, why buying bonds through FSMOne, right? We have already addressed that you should include bonds in your portfolio. Hopefully that 4% at least become 14% lah, right? So I think now the next question you want to ask is, why invest bond with FSMOne, right? So Alicia, I think I will ask you certain question, right? So across the spectrum, from risk-free, AAA, all the way to investment grade and non-investment grade, and ultimately non-rated, right? Across this spectrum of the bond, it gives you 3 to 8%. That means the risk-free give you 3%, and maybe the non-rated or maybe the non-investment grade giving you 8%. So if I tell you that across this spectrum of bonds, all bonds will guarantee payment and principal. So which spectrum of the bond that we choose?
Confirm go for the highest yield one, right? 8%, risk-free ma.
Yeah.
Won't be defaulted. But then, of course, let's back to square a bit. This is not the case in reality, right? Yeah. So then, how can I, address which bonds to buy and how to do it?
Yeah, exactly. So I think that is where we FSMOne come into this picture. I think next slide we will talk about the bond proposition. I think QPQ is a short form I want to bring to everybody. I think first of all, it's a quantity, right? On our platform, we have 1,200 bonds available, right? Ranging from government securities, corporate bonds. We're covering about 7 currencies now: the ringgit, the dollar, the Sing dollar, the Great Britain pound, the Australia dollar, right? So we have a varieties of choices for our client, right? So then, how we fit into this picture? Because I think a lot of you guys, or I think a lot of clients that are in the bank, they have quite limited choices, right? So at here, we do across the spectrum, but we are making sure that these bonds that we recommend, that we onboard and distribute to our client, is able to repay you, provide you a cash flow and also repay you the principal, right? I think that's what I meant by quality, right? I just quickly go through the process of how we onboard the bond and how we decided to distribute the bonds, right? Regionally, we have our fixed income research coverage. I think we have over 20 of them. And also, when we decided to onboard the bond, we've been through a bond approval committees, right? It's a combination of our investment directors and also our senior management, right? Where there have been many years, in the industry, experience in the industry, before they decide that whether we think that this bond is safe, to be distributed to our end client, right? I think the last one I want to highlight, which is a pricing, right? I think we are one of the most, I think one of the fintech bond trading platform that provide a most transparent pricing, right? Just the processing fee on top, that's it. I think, I'm not trying to say, other platforms, but some experience that we came across is that they bundle everything in one. That means you don't know what is a processing fee, you don't know what is the cut, that the platform or the bank are taking, right? So that's what I mean by that. So QPQ, it's our bond proposition, right? This is why you should invest bond with FSMOne. Yeah.
Then moving on to the next slides. Yeah, so we actually launched a new features last year, which is our bond selectors, whereby we actually introduce a set of presets that you could straight away click and understand and straight away get the info on what is the curated bond list via just a click from the presets. So at the featured bond is actually the bond list, the curated bond list by our in-house research team on a regional basis that we carefully selected. And also all of the items that you see here with all the transparency, even the net yields that the bonds that could give you, the volumes that is available now in the market by, everything is really very transparent displayed in this bond selector. Yeah, and then also one thing good about this is you don't even need an account to log in order to get this detail. Everything is publicly available info. Yeah, so feel free to dive into our platform, get to the research and tools here to get access to our bond selector if you want to know more info about it. Okay, so aside from bond, I know everyone loves about equities. Of course, we cannot miss out equities, right?
Especially
He's
this
also,
year.
yes, especially this year. And then equity has been so steady, bon pipi, since last year, right? But then also we have been looking that in the equity space, like such as, and the index-wise, we have been looking, there is quite some volatility happening, especially in the past 2 weeks. And then also we know that there's some geopolitical tensions happening, Trump is coming up. Yeah, so then what kind of strategies, right, would you recommend us if we still want to invest in the equity space? Yeah.
So all I take is that we are expecting more volatility in this year, 2025. So you're asking strategy, right? I do have one. I think it costs you only 2 ringgit. 7:30 will open, Supreme Toto, 100 million. After you got that, you don't have to invest anymore. You can travel around the world already, right? Set a joke aside, right? I think apart from the bonds, now I think one strategy that will really help our client to ride through the volatility that we're expecting this year, which is regular saving plans into ETF, is basically a strategy where you have a long-term positive view over certain industry or over certain country through investing in ETF that give you that exposure, right? And this strategy also remove your emotion, right? When market goes up, I mean your asset price goes up, you tend to say, enough lah,
I
take
can
profit,
earn more.
right?
can
Or
earn
maybe
more.
you say you want to earn more.
Yeah,
Then the next 2 days, the market goes down, right? And also when the market goes down, you become positive. I pray already this morning, confirm one, wait 1 more week, then the market will go up again, right? Or maybe some client kanchiong, 5% they want to take losses, right? So investing in regular saving plan into ETF, right, basically involve you saving a small amount of money each month. I think Alicia will share with you guys a little bit more on how does it work on the platform. But by saving a small amount of money each frequency, and then over the long run, you will see the result, right? I will share a little bit more later. So basically, through regular saving plan into ETF, even with a bumpy and a volatile road ahead, you will be like this car. Smooth.
The Rolls Royce
Okay?
still is smooth
Yeah,
on the
so
road.
what do I mean by that, right? So I put out, we back test this, it's a S&P 500, right? So assuming that for the past 5 years, we save $100 a month, which is on the 15th of the month. And throughout this time, when the market is up, we also be buying. When the market is down, we also buying, right? That remove the emotion, right? Probably a lot of clients from here to here already take profit, right? But this is very different because it's not trading. It's not putting a big sum amount of money into this ETF. It's only involve a small amount of funds that you save into this ETF, which is $100 a month, right? So this, over the past 5 years, with a proven track record, S&P 500, investing into this ETF will give you 43% return. Yeah.
Yeah, so basically this strategy is actually just another way for us to do a dollar cost averaging. Yeah, so like For me, my job is very hectic. I don't really have much time to manage my own investment portfolio sometimes, and I cannot stay up all night to look at the market, how it performs, right? So I will adopt this strategy. Yeah, I'm actually adopting this strategy also on myself, my own portfolio, whereby my ETF, my portfolio in the ETF is actually doing quite well with this DCA method. Yeah, so this is a strategy whereby how you can get access to it, which is on the next slide. You will see that for the ETFs that we supported, we actually do show a button called the Apply RSP. So all of the most famous ETF on our platforms, right, we actually do support this Apply RSP the function. So then some of the clients will actually usually ask me that there is a few thousand of ETF listed in the market, right? But then why is it our platforms only onboarded 100 plus of the ETF? Yeah, so maybe this one, Kinon can give some insights on it.
Yep. Currently, I think on our platform, we have over 3,000 ETF. On the ISP list, we have about 174 of them. How do we come by this list, right? Based on a few criteria. We have a research team actually look after, selecting this ETF that we offer through, to our client through regular saving plan. So there are three things that mainly we look into: best liquidity, lowest management fee, and also lowest tracking error, right? And all these ETF, which also have to be in line with our in-house research view, right? Can't be this morning Kelvin been asking you to, buy US, and then we don't see any US ETF in this regular saving plan list, right? So now we have 174 of them. We have been continuing adding this list. We are expanding this list, right? Yeah.
Yep.
So this is how we arrive and select, which ETF to be, included in ISP offering. Yeah.
Yes.
Hopefully that saves investors time to searching through the 3,000 of them.
And also one thing to highlight, our ETF RSP, this function, right, is actually offering at the lowest cost in Malaysia, which is starting from only RM1 brokerage fee per contract, per contribution. Then moving on to the next slides. So one thing special about our platform, right, is actually the cash solutions. So whenever you want to start investing, you have to have cash in hand, right? You have to deposit the cash into the platform first before you start any investment. So we have our cash solutions whereby when you park your money into our platform, you earn interest in your money, cash. So for normal cash account and ringgit terms, we are actually giving 2.25% per annum by just parking your idle cash in our platform, in a cash solution. And then also you will see that what is this auto sweep thingy, right? So this auto sweep is actually a money market instruments that combines with some low risk instruments inside, like the short duration T-bills and also some FDs, to actually help our investors yielding higher yield, a better yield than our cash account. So our auto sweep is now offering in two currencies. One is in dollar and one is in Sing dollar. Sing dollar just newly launched this month, early this month. So what is so special about this auto sweep is that one thing, of course, it yields you higher interest if you park your money in the dollar and also Sing dollar into this product. And also, one thing very, very special is that it can instantly use to pay for your investments. You don't need to withdraw, to wait for some settlement cycles, then only to pay for your investments. So this is one of the very, very special things that FSMOne can do. This is our in-house product, right? And this is the very, very strong point whereby we provide flexibility, liquidity, and also instant payment to all of our supported products in our platform. So as we all know that, because we understand investors that when it comes to investment, it's always very timely, right? We have to really take action fast when we want to go into the market and tap into the investment. So this is the products that can allows you to do that, while when you are still looking for the investment, you can still earn some quite handsome interest on it. So If you want to know more about it, feel free to approach us in our booth. And also, I think you guys can also approach me. I think I'm very obvious right now, as in I dress in a very red dress. Yeah, you guys can straight away approach me after that in the hall. Yep. So, Kinon?
Okay, I think we are almost there for
Yes.
what we're going to discuss today.
Yeah.
So I think we hope that we give you guys a good overview. Why should you guys include bonds in your portfolio, not just equity? And also, this, the regular saving plan into ETF, it's really very useful, and also some of this auto sweep that we have introduced this year, right? I think dollar were introduced last year. So hopefully we, continue to provide more product differentiation and enhance service to our client. So,
and also, one thing to highlight, this auto sweep is actually earning daily.
Yeah.
The interest is grow in a daily basis.
Yep.
Whereas for our normal cash account, we do support up to 8 currencies for our normal cash account. But then the interest is actually crediting on a monthly basis. Yeah.
Yep. Okay, so I think before we end the session, we hopefully next week, Monday, or when you guys claim your 100 million, we do see 100 million inflow into our platform, okay?
Yeah.
Buy bond.
And also invest into our cash solutions.
Okay, thank you.
Thank you so much.
Thank you.